Well, that was a very powerful day to the downside. We got a lot to discuss on today's episode. We're going to be talking about the volume down here, the risk ranges. We're going to get into some tech stocks, look at a couple of heat maps, just give you my overall view of what's taking place here in the markets. If you're new here, welcome to the channel. This is the Stock Market Brief Show. My name is Michael Silva. We use technical analysis, intermarket analysis to get a good idea as to where the market might be headed next. Got a lot to discuss, so let's get into it. Welcome back, everybody. First and foremost, make sure to hit that thumbs up button and subscribe to the channel if you haven't done so already. So yes, a very, very powerful move to the downside. We all know, and we're wondering, is the market crashing right now? Is it not? People are going to point out the volume. They're going to be like, it wasn't that much fear. This isn't capitulation. It could potentially head lower. Yes, 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 yes. I understand that. Now, this is where I kind of want to dive into volume a little bit deeper here. So first and foremost, when you get this type of volume right here, on this move down, that signaled capitulation, and we saw that move up. Now what we're doing is we're retesting a low on lower volume. That's not necessarily a bad thing, and you're not going to probably hear too many people talk about that as of right now, given the volatility that we're in. But let me just break something down for you. This is from Martin Pring's book a while back. Understand this. So just like we showed right here on this previous chart of the S&P 500, okay, I want you to pay attention to this drop, this big drop, and how it came back up and came back and tested, okay? Now, if we go here, the selling climax is what it's pointing out. So the selling climax is, you can be seen right on the volume. So we came down, we came back up, and we're retesting that low just about, okay? If we continue on, what you want to look for is a low volume on that test, okay? So that right there is actually not a bad sign. It depends on what takes place thereafter. The next sign that you want to look for is obviously a bounce up, and then you want to start seeing volume accumulate outside to the upside. Okay, so that is what we need to pay attention to and look for. And what we're seeing here is pretty textbook as far as a capitulation move to the downside. We're coming back to back test. We're testing on lower volume. All right, so we haven't had that capitulation. Now, that doesn't mean that a capitulation event cannot occur. And being that we're right here in this risk range that we talked about in the prior week, understand we're at the lower range right now. So that means if we start getting outside of that, a lot of volatility could take place, especially right at around this 420 level. Okay, and we'll get into some VIX charts here momentarily, but just understand in just the quick 2 days of this week, we're already down at the very bottom of that range. And the more that we get outside of that range, you're going to have dynamic hedging take place, which causes more and more volatility. Okay, and that could definitely create more sell side activity as well in the marketplace. Now, what took place today overall? We had one sector in the green, that was energy. Everything else was down. Now, in this type of event, this is where it gets a little interesting to me. So yeah, on a big sell-off, it's likely to see tech and consumer discretionary down towards the bottom. But what I find kind of structurally weird here is that utilities and even consumer staples, they were, middle of the pack. I mean, consumer staples was top 3, but it wasn't really, nobody really flew to safety anywhere here between some defensive sectors. And that kind of threw me off a little bit here. And we'll get into that momentarily. But first and foremost, let's hop back into the quarterly chart that we talked about yesterday. We're right back down at the quarterly 5 EMA. We still have, obviously, the rest of this month and next month. Let me know in the comment section below if you think we're going to have a quarterly close below it or if we're going to start bouncing from this level. I'd be interested to know. Now, if we do have a quarterly close below it, typically, right, the blue box is the Fed steps in at some point and does something. Now, what could the Fed potentially do? Well, I don't know. It's a very difficult thing to navigate. I will say that the yields are continually compressing, right? The curves are completely flattened out like a pancake right here. We're down to 0.41. A little bit of a bump today. And the thing is, the closer it gets to inversion, it puts more pressure on the Fed. And, I was talking about where did money go to today? Well, I mean, you'd think that maybe we'd have some sort of safety event come into bonds. That was not the case. TLT was down 1.38% today, taking a little bit, of a breather from this previous area of resistance that we mapped out on prior videos. The dollar, however, the dollar was up slightly on the day, so maybe people flew to that. That's a possibility, but it's not like it was up tremendously. We're still, just trading within this range here. It does look like it's kind of coiling up. Looks like it could potentially start breaking out further. And if it does, there could definitely create some more pressure to the downside. Now, before I continue on any further, I talked about yesterday, I made a prediction that we probably see an inside trading day. We'll probably trade up a little bit and then have a matching low to a little bit higher. And I thought that was kind of fun to maybe just make a prediction every day of whether it's going to be a higher high, higher low, lower high, lower low, etc. And so clearly I got one thing right? So we had not an inside trading day, but in inside trading day, you would have a lower high, and then we cracked that bottom and started heading lower. So tomorrow, I'm going to just throw that out there. I'm thinking that we have a lower low and a lower high come tomorrow. So if the price action starts to move up tomorrow, I think that it could probably stall out right around this point. And then as far as a low goes, I don't know if we're going to go too much further down, but I'd say right at around 420 could be a level to watch. Given that this market is driven by news headlines right now, it can be anything, but that's my guess going into tomorrow. Maybe I'll keep a little spreadsheet on which ones I get correctly. So I'm thinking lower high, lower low going into tomorrow. Now let's go ahead and hop into a couple other things that did okay, right? So gold is still holding up after this breakout. And then silver had a pretty impactful day today too, getting back above that 200-day moving average. That is one thing that I've been paying close attention to. We'll see if it holds. I'd like to see a couple of days trade up within there, but just understand that the move up here, was very significant, and it didn't really have time to digest. And I would like to see some digestion before further move, but it's cracking this. It's getting back above the 200-day. It's getting back above this downsloping trend line. So it could be the start of something potentially bigger in the price of silver to try to get it back up to the upper edge of that channel. And that could mean that miners can do very well in that environment. Actually, what's crazy is if you actually overlay a chart of silver to the GDX, you will see that actually they move surprisingly hand in hand for the most part. So if silver starts moving up, I think silver will too. If silver goes up, I think the miners will too. So what can potentially get this market a little shell shock to the bullish side? Well, I'm looking here at the Fed probability calendar, and right now we have a Fed meeting in 20 days, okay, March 16th, and there's a 100% chance of a Fed rate hike. But what I noticed was these are the rate hike in bips right here. So 25 to 50, 50 to 75. So 50 to 75 earlier this month, about mid-month, it was actually a lot higher. Then it started to drag off, okay? And then even earlier in the month, the 25 to 50 was higher as well. And now this is starting to come off a little bit. So what's interesting to me is as these potentially head lower, meaning that the probability of a 25 to 50 bip rate hike gets lower, what could be a potential surprise to the market is if the Fed does nothing. And if the Fed did nothing on the March, given the March meeting date, which we're pricing in a 100% chance of that happening, but just understand if nothing takes place, that could send the market potentially a lot higher. Also to note, if it's just a 25 bip rate hike, that could potentially also be some sort of point where the market already priced it in, where we get a rally from there. So as far as the surprise goes, I think that it would be a no rate hike, and potentially if a 50 bip rate hike came in, I think that would be a surprise, but more to the bearish perspective. So I think that we could potentially rally here if there's none, or if there's a 0.25. Now that's all speculation, but I just wanted to call out that I am noticing those numbers drop here, and that could change here coming up into March. We still have more time. Now let's take a look at the heat map. The heat map is looking at year-to-date performance, completely and utterly just obliterated. Tesla was down massively today. Holy moly, it was down. Well, it's now down 27% year to date. Amazon's down 13%. Google's down. Facebook's down like 30 or something like that, or 40, something crazy. It doesn't show it right here. Microsoft down big on the year. Apple down big on the year too as well. Now, I want to call this out. This is not like a crazy move to the downside by any means. They're still relatively high, from where their March, 2020 dip was from the pandemic low. And I want to point that out here on some of these charts. So first and foremost, Netflix has gotten hit very hard, and this is cracking. This is crazy, right? And I'm not using a log chart here. You can use a log chart if you'd like, but it was just a little bit cleaner on this. Look, so I'm just dragging a trend line from the March 2020 bottom here, and then moving it up, and you can see when it cracked, it was a pretty significant move to the downside, and we're trading, right back into around that area. So it's just been complete devastation right there. Tesla just recently cracked from the March trend line, so I just wanted to point out that's from the March low coming all the way up, and now we know what happened to some other big mega cap stocks when they cracked that trend line. We just looked at Netflix being one of them, and that was a very, very big day. It's down 10% so far in the week. The week's not even over yet. Facebook, similar situation, right? We cracked down, we back tested, and then we just completely and utterly got obliterated, trading under $200. Can you imagine if this drops further to around like the March low right here. Where's that? 150, 160, 140, this range. That would be absolutely crazy if that were to take place. If you take a look at Apple, Apple is still holding the trend line from its March 20 bottom. You can see it tagged here, it tagged there, and now we're just kind of right on there. Now understand, Apple's also a big mega cap stock. So if this starts cracking, we start seeing some price action like we do in Facebook or in Tesla. I mean, this one's going to hold. That'll definitely put weight on the market overall. Same thing goes with Google. Google's right there on that trend line, just barely hanging on. So this could bounce from this area, but understand that if we start cracking these trend lines and start closing weekly below there, we may get back tests, but it's just not looking good overall for these big tech stocks. I'll show you Microsoft. Microsoft did crack down from the trend line, and it did back test, and now we're starting to see it sell off a little bit more here. So not the greatest look as we're just in this bout of volatility. Amazon, same thing, right? We cracked down from this 2020 trend line. We back tested it twice and then started heading lower. Big down day today. Okay, so a couple interesting charts that I want to point out now. This is the SPIP over GOVT, and this gives us an early indication that volatility may come. So over here, when it reaches, the rate of change reaches up to 1.3 to higher, you can see these pink circles. It gave us a leading indication that volatility may have been right around the corner. And the last time we talked about it was this double here where it hit it twice, and we saw obviously that big move of volatility. And we're coming back up into that range again, when volatility is already pretty high. So this is telling me, hey, if we do reach up to this 1.3 or higher, maybe there's a lot more volatility that we might be seeing here in the near future. And if I show you a 30-minute chart of the VIX, we talked about this inverse head and shoulders actually right here originally, and then we mapped out a target of right here. We hit it, and now what we're doing is we're breaking out, we're back testing, and we started heading higher. So if volatility wants to creep up and you want to see fear, real fear in the market, volatility can easily go reach up to 40 plus. And if that's the case, there is one gap above us at around 45. So that could potentially get filled if we get a full measured move on this inverse head and shoulders, causing a lot more fear, a lot more panic, a lot more downside in the S&P 500. Let's take a look at the Qs. So the Qs now are right about at its lower range. So keep in mind what we previously said about the lower range when price gets outside of it. We're not quite there yet. We'll take a look at the futures market. If I'm making a guess of what can take place tomorrow, I would imagine a lower high tomorrow and a lower low. That would make sense to me. But as far as how low it can go, right, we're in the middle of volatility. So if we start getting way outside of it, we can see some more sell side. But understand that typically this is more going to be a safe zone. And the Theo team stated that 70% of the time, a little bit lower than that, price will end up within here. So there's a good probability that we'll just stay within this channel by the week's end. So if we come out, we may come back in, may doodle around like that in the coming days. Let's continue on here to the Bpndx chart. This right here is actually getting a little overextended to the downside. So when this reached up to the top, we talked about that and we started to sell off. Now we're reaching back down to the bottom. I like to look for positive divergences and or just overextended areas, and we're reaching down in that area as of right now while we're hitting that lower range in the risk range on the Qs right here. So it does look to me like, hey, yeah, there is a possibility that we can bounce. Pay attention to the volume profile here too as well. Very similar to the S&P 500, right? Capitulation to the downside. We're coming back to back test that low on significantly lower volume, right? So people are going to look at this as potentially bearish. Well, they're going to probably say, well, there's no fear here, right? We don't see any fear. And from a price action and volume perspective, if you are bullish, that's actually not a bad thing. Just understand if we start getting a capitulation event on high volume, well, then obviously that would be more bearish. What we want to see is price start to jump up, and then all of a sudden as it carries up, we do want to see some increased volume as what we previously showed earlier on this episode. Now, if we continue on further, I want to go to the BPSPX chart. BPSPX chart is also getting down slightly here. It still has a little bit more room to go to be overextended to the downside. And if you take a look at the percent of stocks above the 50-day, 200-day, those are also getting pretty darn overextended to the downside as you're seeing a new yearly low close on the SPX. So we're getting what? 37% of stocks are above the 200-day, and then you have a 26%. So just, nosebleed levels right here as the market's been selling off. Now I want to just close this off with just two more charts. First and foremost is this one. I like to look at the summation index along with the McClellan oscillator. And when you have this below zero and it matches to a tag to minus 300. Doesn't happen often. You can see it happened on these blue vertical lines going across the screen. But during that period, you typically saw more volatility and a lot more sell side activity that took place. So I'm not calling for that to happen. That is what is happening so far, right? So this blue vertical line, it was below zero here. It hit minus 300 on the T. We bounced up and then we started selling off to another low. That happened here in the pandemic. That happened here in 2018 and late 2018. That also happened early 2018 where we saw a bounce and then it reverted all those lows. So just be mindful of that. When the summation index is well below zero, nothing really good happens. Just like Paul Tudor Jones says, when the price is below a 200-day moving average, nothing really good happens. So just be mindful of that, right? Don't try to be a hero in this environment. It's a very difficult environment to navigate. The last thing I want to show you is the bottom fishing indicator where can we potentially find a bottom? And I just want to call out that this is the NASDAQ record high percent index. And when you apply a 10-period EMA on it, what you can see here is when it crosses down below this minus 20, crosses back up 35, it's found some good bottoms, as you can see through these blue vertical lines. It actually caught the one right here coming from the long-term capital management hedge fund blow up when the Fed came in and bailed them out, and then we saw that explosive dot-com move up higher. And actually, to be honest, see where it was before it started turning up. We're actually coming down into those type of levels. So David Hunter's talking about a melt up. Wouldn't that be funny if this would be the indicator to tell us when it actually starts up? Because I'm pretty sure he said it was February 9th when it was underway, and then that was basically a top before it tested this previous low. But you can see here, as of right now, the last time it was down at these levels, it was really the financial crisis where we saw, come down, it bounced up, didn't get a new high, and then we started to sell off. So if we're heading into, a period where we are going to enter into recession and more of a deeper sell-off, you can see something similar, right? So if this starts turning back up, maybe we catch a move higher, maybe or maybe not, it doesn't produce a new high, and then that's always a possibility to head lower there too as well. But what we want to see is this to start turning up and getting back above 35 to feel a lot more confident that we could see some price head a lot higher. As it stands right now, as we wrap up into the conclusion, resistance continues to hold as price gets denied, and support continues to get broken down. Be careful out there, everybody. Hope today's episode helped out. I will see you back here tomorrow.